Steady currency weakness over the past week has slowed in the East African region, and the Kenyan shilling has come back a little bit off the 106.50 low, toying with an all-time high of just about 107.10. On the back of a CBK governor meeting heads of commercial banks over the currency volatility in the region. RMB's Roy Daniels joins me right now from Johannesburg to take a look and a little bit more analysis on these figures. Good afternoon, Roy.
Good afternoon, Bonnie.
Roy, help us understand in terms of the context. We've seen the Kenyan shilling fall to a 4-year low. We're touching 105, 106. How worried should we be?
Bonnie, I think we need to look at the whole picture as to why these currencies are weakening. And it's not so much the fundamentals or the economic fundamentals inside the countries themselves. I think it's more to do with we're facing emerging market sell-off. We're facing a very rampant and a very strong US dollar. So I don't think that we should be panicking. I think it's the rate of the depreciation of the currency. I think that when we see the sudden acceleration, that causes concerns for central banks. You know, we talk about the Kenyan shilling being weak now and just below the 107.10. The rand touched 14. Yes, there's concern, but there isn't panic in South Africa, and I don't think there should be panic in Kenya either. I think we need to look at it as an orderly fashion. Does a weaker currency spell doom and gloom? I think it means costlier imports. So hopefully we start to learn to import less. We maybe learn to produce a little bit more in our own countries. And effectively our exports become worth a little bit more. We earn a bit more from our export proceeds. And I think more importantly for a Kenyan point of view is, given the situation of the sort of concerns around sort of the social unrest that takes place now and again, there might be those people sitting on the fence that are unsure, should we go, shouldn't we go? The weaker currency could well be an attraction, I think, for some of the tourists that might think it's time to go back and visit Kenya. Let's go spend some money. Let's pick up a bit of tourism. So it's not a train smash. It's not something to be overly worried about or overly concerned about. I think there is some concern, but we shouldn't be panicking just yet.
Roy, you've mentioned something very important about capping the imports for the East African markets. And just this week, we got a new set of numbers saying that our current account deficit has widened to 23%. Obviously, everything beyond our borders is against us. How best can we mitigate this?
I think if we look at the currency and we say the weaker currency now, you know, we're a firm believer in South Africa that the weaker currency is a good capital account balancer. And I think the same impact's going to happen now for Kenya. It will happen over time. You won't see an immediate effect, but you will see imports costing more. You'll see a slowdown. You haven't seen the full benefit of the oil price below $50. So all those are sort of lag effects that need to come into the current account. Once those coming in, I think we'll see things picking up just a little bit more for the Kenyan capital account. And again, the benefit now of the exports. I see tea prices went up slightly. Hopefully that pulls coffee with it as well. So now there's a bit of a increase in those two major commodities for Kenya. And again, we'll see the benefit of that later in the current account. So I don't think we need to be overly concerned about it. I think we will see benefits creeping in. You're going to see the current account spike a little bit more to the negative side before it recovers. But I think that's a positive. I think going forward, weaker currency will certainly help that. And also, it's going to stem a bit of the inflation concerns as well. We'll see food prices stabilizing to, coming slightly lower, and I think that's going to be a big benefit again for Kenya. It's kind of a bit like we talk
Roy,
about.
You're suggesting. Let me just jump in, Roy.
Yep.
You're suggesting we shouldn't be worried too much. We saw the Central Bank of Kenya go into almost a panic for the first time, summoning CEOs of commercial banks to discuss this whole phenomenon. It's the first in Africa, isn't it?
It's not a first for them to summon CEOs. We've seen this play out in West Africa as well. The CEOs are summoned, the currencies stabilize, the banks are reminded about the legal processes around running positions, but you don't see a major recovery in the currencies. The CEOs can't impact that. It's about the supply and demand side. You know, we have this sort of what I refer to at the guys, we have this sort of what we call the Mastura effect, which is a patience and things will come to you. So we look at that and we say, let's calm things down. Let's make sure that we look at things properly. Let's cater for a slightly weaker currency. What is that? What is the impact of the weaker currency? You know, we can worry about speculation, but we can worry about how currency is going to weaken, but it will balance things out. You do get a benefit of a weaker currency. The Kenyan shilling's down 17% from January this year. The rand's down just over 18%. Is it out of line? I don't think it's out of line. I think it's in line with what's happening in all emerging markets, not just African emerging markets. All emerging markets are struggling. All emerging market currencies are weaker. We are not out of line as to where we're actually going. Let's be patient. Let's see how it plays out. The dollar won't remain strong forever, but we need the patience and things will come to us.
Roy, I like how you're calm about all this situation. But many thanks for speaking to us. Roy Daniels of the RFB.